Hi student, this is two partners becomes insolvent. So the when two partners are becoming insolvent, the in the last video we solved that one partner insolvent. In this problem we are solving the two partner solvent. So in a two partner solvent, the problem is given that their balance sheet is provided. So Narendra, Devendra and Mahendra are partners sharing profit and losses at 3 is to 3 is to 2. The business is dissolved on 31st March 2020 when their balance sheet stands as below. So Narendra, Devendra and Mahendra are the partners. Their profit sharing ratio is 3 is to 3 is to 2. So they are dissolving the firm. They decided to dissolve the partnership on the above date as follows. So they wanted to, they decided that to dissolve the partnership firm. So when they are dissolving the partnership firm, they had to pay for the liabilities. So how they will pay for the liabilities? They will sell the assets and then they'll pay for the liabilities, and they will close all the accounts. Then they can firm, dissolve the partnership. So in this, two partners are insolvent. When two partners are not in partners are the insolvent in the partnership while dissolving. So their assets are plant and machinery. The balance sheet of 31st March 2020, plant and machinery 1 lakh rupees, motor car it is 20,000, sundry debtors 90,000, stock 1 lakh 20,000, and cash at bank they have 10,000 rupees. So next, capital account of Narendra and Devendra Mahendra. These are their investment 20,000, 80,000, and 40,000. And sundry creditors amount is 2 lakh rupees. So they have to prepare a first realization account, means they're closing all the accounts. So recovering all the amounts to whom they are going to pay. So all the things are coming under a realization account. So in a realization account, so first entry is that first adjustment is the machinery and stock are sold for 50,000 and 36,000 respectively. Debtors realized for 40,000 rupees. Motor car is taken by Devendra for 26,000 rupees. When the firm is dissolving, the some partners are show interest to buy things. Whichever the firm products are available, they want to buy it. They will show the interest to buy the products. So Devendra for the motor car is taken by Devendra for 26,000 rupees, and realization expenses amount to 2,000 rupees. And deficiency of any partner in capital account is to be met by the other partners in profit sharing. Narendra become insolvent and Mahendra could bring in rupees to 10,000 rupees only. So 10,000 rupees will be recurring by the Mahendra. So Narendra become insolvent and Mahendra is bringing amount of 10,000. Later on that Narendra will pay to the Mahendra. So first they will do the closing all the accounts to while dissolving the firm. Then it's of their personal thing, when they are going to pay to their partners, and later on they have to pay for the partners. But in the account, realization account, what are the amounts are recurring, so these things will come in a realization account. First we'll do the wherever the adjustments are happening, like wherever they can provide the assets and sell the assets and pay for the liabilities, that will be come under a realization account. So first one is sundry assets account. They have a assets of plant and machinery. If they sell the plant and machinery of 1 lakh rupees, and motor car 20,000 rupees, and sundry debtors is also asset for them and it is a 90,000 rupees. Stock is 1 lakh 20,000 rupees. This is the assets that are available with them. These assets are 3 lakh 30,000 rupees assets, and from these assets they are going to pay for the liabilities. And next is, so that's why these things assets are coming in a debit side, and in a credit side, credit side, what are the entries are coming? Liabilities by sundry liabilities account, that is creditors. Creditors amount is 2 lakhs rupees. This creditors amount is 2 lakhs rupees. And by bank account, that is Here in the adjustment is given machinery. Machinery and stock are sold for a 50,000 rupees. They are sold for a 50,000 rupees and 36,000 rupees for the stock. And debtors amount is 40,000 rupees. So debtors realized for a 40,000 rupees. So these are the liabilities. So 1,26,000 rupees. And by Devendra's capital account, Devendra's capital account amount is 26,000 rupees. Here motor car is taken by the Devendra for a 26,000 rupees. So that will be come in a liability side, a credit side only. By Devendra's capital account, motor car taken, that is 26,000 rupees. Next is by partners capital account loss and realization. So how much the loss is realizing recurring, that will be transferred to partners capital account. So here it is amount of before calculating this how much it is coming by to bank account. To bank account amount is cash at bank. To bank account amount is 2 lakhs rupees. To bank account sundry creditors amount is 2 lakh rupees. And the expenses paid, that is realization expenses amount to be paid, that is 2,000 rupees. So it is total amount is 2 lakh 2,000 rupees. This is expenses paid and a creditors paid. So 2 lakh and 1 lakh 26,000 plus 26,000. Here it is 3 lakh 30,000 rupees and 2 lakh 2,000 rupees. Its total amount is 5 lakh 32,000 rupees. In a 5 lakh 32,000 rupees minus 26,000 minus 1 lakh 26,000 and 2 lakh rupees. So leftover amount is 1 lakh 80,000 rupees. This 1 lakh 80,000 rupees will be transferred to the partner's capital account. So that is in the ratio of 5 is to 3 is to 3 is to 2. So 1 lakh 80,000 into 3 divided by 8. So they will get us at 67,500 as Narendra. For the Devendra it is 67,500 because the profit sharing ratio is same. And for the Mahendra it is two ratios. So 1 lakh 80,000 into 2 divided by yet he will get a 45,000 rupees in a partner's capital account. This is the partner's capital account. Loss will be transferred to the partner's capital account. So their loss amount is 67,500, 67,500 and 45,500. Whoever putting the more amount, they will be go under the loss, and who are the getting the investing less amount, they will be in the normal situation, like according to their ratio and according to their investment while dissolving the partnership firm. And also they will get the profit or the leftover amount according to their ratio and investment. Next is partners capital account. So partners capital account, that is realization amount. This partners capital, this is a loss and realization account. Amount will be transferring here 67,000 rupees, 67,500 and 45,000 rupees. Loss and realization. To realization account, that is a motor car is taken by the Devendra 26,000 rupees. Devendra's amount is 26,000 rupees. So next is by balance brought down. This amount by balance brought down 20,000, 80,000 and Mahindra it is 40,000 rupees. 20,000, 80,000 and 40,000 rupees balance is brought down in the partner's capital account. Next is by bank account. By bank account, the Narendra become a insolvent and Mahendra could bring a 10,000 rupees only. So this is a 10,000 rupees is coming here in a Mahendra's account. So he is giving a 10,000 to the Devendra. So by Devendra's capital account and by Mahendra's capital account. So in the ratio of 67,500 into 67,500 minus 20,000, that is a 47,500 rupees. So 47,500 in the ratio of 3 divided by 5, in the ratio 3 is to 2, 47,000 rupees. capital deficiency of Narendra rupees 47,500. This is distributed among Devendra and Mahendra in their profit sharing ratio. 47,500 rupees is the deficiency amount needs to pay from the Narendra. So that is Devendra and Mahendra are in the profit sharing ratio they are paying to the Narendra. So their amount is 28,500. 47,500 into 3 divided by it is 28,500 rupees. Mahendra 47,500 into 2 by 5, 2 divided by 5 is 19,000 rupees. So Narendra's capital account. So these both are giving to Narendra's capital account, that is 20, Devendra capital account 28,000 rupees, Mahendra's it is 19,000 rupees. So next is by Devendra's capital account, it is here it is 67,500 rupees. And by bank account, in a by bank account this amount will be 28,500 rupees, and for 19,000 rupees is coming here to in a Narendra's capital account, that is 28,500 plus and 19,000 rupees. So total amount of this side is 45,000 plus 19,000, it is 64,000 rupees, and here it is a 67,500 rupees. To we need to find a, what is the Mahendra's capital account. So Mahendra's capital account by Devendra's capital account he will pay it is a 50,000 56,000 rupees. uh, Sorry, by capital account by Devendra's capital account it is 14,000 rupees, means 40,000 plus 50, 50 minus 60, 64,000, 14,000 rupees as a because of payment of Narendra's capital deficiency. Mahendra become insolvent. Mahendra become insolvent, therefore his capital deficiency is borne by Devendra, that is 14,000 rupees. So that is from the Mahendra. This 14,000 rupees will be coming to the Mahendra's capital account, 14,000 rupees. So total amount is 1,36,000 rupees. In a 1,36,000 rupees minus 80,000, it is a 56,000 rupees. So the and so this is the amount of the partner's capital account. So Mahendra is paying for the he's the deficiency for the Mahendra. Now, Mahendra is deficient for the Narendra, so that's why his amount is coming to the Devendra's amount. Devendra's capital account. So this is the capital of 67,500 and 1,36,000 rupees and 64,000, 67,000. So both side. So partner's capital account. So this and after this is the amount left over with them. So now we'll transfer the entry of bank account. So by balance brought down, that is 10,000 rupees which is given here, the which is paid by the Mahindra, this 10,000 rupees. And by realization account, here it is a realization account 2,000 rupees. Sundry liabilities by bank account realization, it is 2 lakh rupees. By realization account, here realization expenses amount 2,000 rupees is coming here, 2,000 rupees. And next is by realization account 1,26,000 rupees, 1,26,000 rupees. Here amount is a 1,26,000 rupees of the creditors amount. So 1,26,000 rupees, and Mahendra's capital account 10,000, and Devendra's capital account it is a 56,000 rupees. So this will be the available balance with them, the 2,02,000 rupees and 2,02,000 rupees. This is the bank account calculation. So here this problem is related to two partners become insolvent.